Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Jim Dwane from Bolt. Jim, how's it going today?
Fantastic. Fantastic. How you doing?
Awesome. I'm doing very well. And just before we started recording, we realized that we're sitting like 12 miles away from each other in the Atlanta area. But welcome to COVID world, where it really doesn't make a difference where you're sitting. So, Jim, thank you for joining me today. So we always start with letting you give the elevator pitch. So what does Bolt Solutions do?
So Bolt Solutions, so first of all, Bolt is actually a global company. We go by the name Bolt Tech globally, but Bolt Solutions, I'll focus just here in the United States. What we are is an exchange. We're a very, very large insurance exchange, and as you know, the definition of an exchange basically is you marry buyers and sellers. We're $4.5 billion in premium running through the exchange on an annual basis, so we're extremely large. And fundamentally speaking, there's really four ways that the insurance industry, companies and consumers engage with the exchange. The first one is as a supplier. So we've got, 90 plus carriers that make up about a couple hundred carrier line of business combinations that are integrated onto the exchange or into the exchange, and those carriers and products are there and available to the other three categories, which are the consumers of the exchange, or those that use the exchange to purchase insurance, or B2B2C insurance. So the first one, and the one that really where we got started as a company, is software as a service. So we count among 5 of the 10 largest insurance companies in the United States as customers, and they license our technology with really two fundamental objectives. They're all a little bit differently, but ultimately it boils down to being a one-stop destination for the consumer. So rather than going to this carrier for auto and this carrier for home and this carrier for something else, they have the ability to offer multiple products with multiple companies, so at the end of the day, they become the ultimate insurance destination. So that's one. And then kind of related to that is all of them at some level we're looking to diversify and sophisticate their distribution. So that's the first one, software as a service. How all of those customers, by the way, got to us are very different, and ultimately how their solutions are constructed are different, but fundamentally that's why they're engaged with the exchange. The second one is actually what I call retail. You won't see this on our website. It's just my layman's explanation of what the third category is. And that is very small agents and medium-sized agents and even individual consumers can engage with the exchange by paying a monthly access charge. So they pay a monthly access charge, and as a very small startup agent, you get your P&C license, you get your E&O insurance, you subscribe to the exchange, you're in business tomorrow. And then individuals can also go online and get insurance. The third one is what we broadly call partnerships. And partnerships is probably the most exciting one from the perspective of it's our fastest growing, it's our newest, and it's actually a reflection of one of the trends a lot of people in insurance are talking about these days, which is what I call the democratization of insurance distribution, meaning, if insurance started as you go to an agent or kind of an insurance company and you get coverage. What's happening now and what you see is that anywhere there is a transaction or anywhere that there's an intersection of commerce and risk, so think the real estate industry, the automobile industry, there's a bunch of digital and web-based companies, the financial services industry, all of them sit at that intersection of commerce and risk. So we actually have the ability to plug the exchange into that intersection, thereby allowing, say, a real estate company to no longer just be a realtor, but they can be a destination for the home buying experience. You can apply the same logic to the automobile, or you can apply the same logic to financial services or other types of debt, etc. So that's the third category. So SaaS, retail, distribution are the ones who actually are consuming it. And then the fourth is the suppliers to the exchange. That's Bolt. It was a long elevator, but that's Bolt.
Okay. So how long have you guys been doing this within insurance?
So we are the oldest new tech around. We've actually been around for 20 years. Now, full disclosure, we've been in our current, as you would expect of a technology company, we have evolved, changed, pivot, and reinvented ourselves many times. We've really been in our current form, call it 6 to 8 years, I'd say. You know, how we got started is actually a quick, funny story. I'm going to embellish it a little bit, but I'm not too far from the truth, and I have the founder's permission to embellish as I'm going to embellish. But basically, our founders, who were kind of lifelong friends and both technologists by trade, they actually met in Israel. They they were building basically policy management systems, policy distribution systems, and a large financial institution came to them and said, we want to get in, we want to start offering small commercial insurance to our banking and credit card customers. So these guys said, Eric and Ari said, sure, we can build that for you. So they built it, and as large corporations are often want to do, they changed their mind. And they abandoned the project. So there were Eric and Ari, they were standing there with all this fantastic intellectual property, and they're like, okay, now what do we do with this? Thus was born the modern iteration of Bolt. So it's more complicated than that, but that's my version of the story. So that's how the company was born, and we have continued to evolve and build from there. And one of the things I think that makes us a little bit unique from other companies is we didn't subscribe to a build it and they will come approach. We said, we're going to find these big, important customers. We're going to do and work and serve them in every way we possibly can. And in partnership with our customers, we went out, and as they told us, we want you to integrate this carrier and this carrier and this carrier and this carrier, we did so. 8 years, 10 years later is where we got the 90 carriers with the couple hundred lines of insurance. And that's kind of who we are and where we came from.
Okay, so 90 carriers, including some of the largest. So you've got a significant footprint. As good insurance nerds, since we both refer to ourselves as insurance nerds, we know that there's like 2,500 PNC carriers in the U.S. Like it's an incredible number. So basically, you've got some of the biggest covered. How can you help kind of that mid-sized super regional carrier, which there's so many of that are not yet part of the exchange?
We continuing to subscribe to the philosophy that says customers first, carriers second. As we continue to diversify our own customer base, and we've diversified our customer base pretty radically, our total addressable market 12 months ago, this is typical tech company stuff, 12 months ago today, our total addressable market was about 500 insurance companies. Because at the time, we were really only doing SaaS. And then we had our retail distribution organization. You fast forward to today, and we've got 6 products, and our total addressable market is well over 10,000. So what that has, kind of the knock-on effect has been, to the point of your question, as we've signed on a more diversified group of customers, so too have we found ourselves now engaging with some of the more regional, super regional carriers as our customers require. So that's kind of how we're going to continue to build. Now, I will say this. We do spend a little bit of time kind of trying to be strategically opportunistic or kind of see into the future. An example is cyber. We haven't actually had any of our customers come to us and say, we need you to put cyber, but we see what's coming, right? We see what's coming in the industry, so we know that we needed to proactively go out and build a cyber product. And when I say that as a tech nerd, not an insurance nerd. So we had to build the technology in order to handle the cyber insurance. Then we go out and we find the cyber partner carriers, and we kind of queue them up, and we start getting them ready. So that's an example of where we have been a little more anticipatory in terms of it. But by and large, that's how we do it, and that's kind of the philosophy. And as you and I were talking about a little bit prior, you know, that probably the primary binding constraint once we get them in the crosshairs is, are they API ready? We essentially insist that all of the carrier partners we engage with have the ability to integrate via API, because it's really important from our customers' perspective that we have the ability to give them that true rate versus a manufactured grade or a screen scrape grade, or et cetera. So that's kind of how we do it.
Okay, so for agents, when, what kind of agents are a good match and really make sense to plug into the system?
Great question. So we put them in two categories. We put the agents in two categories, and the reason we put them into two categories is basically because the value proposition for a very small agent, from our perspective, is very different than the value proposition of the medium and the larger agent. And the difference is this. With the smaller agent, as I mentioned before, what they need is carrier appointments. They need access to the market and capacity. We give them that. We've got all of those carriers. We have a digital wholesaler that serves as a facilitator. So these folks, they subscribe, they leverage our digital wholesaler, our appointments, and they're able to, as I said before, kind of get up and running almost immediately. So access to markets is the primary value there. The primary value proposition as you go upstream, size-wise, however, is efficiency. I came into this business in 1989, and in 1989, the agents were complaining about the exact same thing they're complaining about 32 years later, which is we can't find a cost-effective way, or we don't have a cost-effective way to handle our personal lines and our small commercial. By leveraging our exchange and the technology, I call it the pane of glass, and the pane of glass that goes along with it, we give them a far more operationally efficient technological solution with kind of what I call the added benefit. They don't need our carrier appointments because they have their own, but you and I both know as insurance nerds that there's the retail market and the wholesale market, and every once in a while, your carriers don't want the risk you've got, and you need to go to the wholesale market. Currently, the average agent has to test their retail markets. Oh shucks, no one wants to write it. Step two, we're going to go to the wholesale market. Well, with our exchange, they actually do all of that at one time in one place. So concurrently, they're getting quotes from their carriers, their appointments, or not, and they're getting quotes from our appointments that are much broader than theirs, and it might give them access to the wholesale market. So it's kind of a slick efficiency play for those medium and large size brokers.
Does that even so on the wholesale side that includes E&S carriers?
Yeah.
Or
yeah,
okay.
It can. Now, the E&S is an example of 95% of what we do is completely digital. If for some reason we do get a risk that's E&S, we have the ability to place it. We have relationships with E&S brokers. Our preference, however, and kind of our strategic priority is digital, the digital experience.
Okay, yeah, on the E&S side, it's
Yep.
the risks are so different, right? They're so
Correct.
unique that it's very hard to make them flow through the system.
Yeah. We've got some fantastic E&S partners that really, we've long-term relationships with, and it's pretty seamless. And by the way, we do, again, since we're a technology company, to the extent possible and to the extent they're willing and able to do it, we do try to digitize to the greatest extent possible our relationships with even the E&S carriers.
Okay, gotcha. So what's next? 2021 and forward that you can talk about for Bolt?
I'm going to answer your question, but maybe I'm going to answer it from left field. I guess I'll answer from this perspective. What's the coolest part about working for an insurtech company? Because this is the answer to your question is, one of the coolest part of working for an insurtech company is you either help or you force companies to make a deliberate strategic pivot. Almost none of our customers either knew what the solution was before they met us or wanted to change before they met us. So we actually have a front row seat to watching these companies kind of transform to say, we do it this way, we know that this way is not sustainable, but we don't know what the future is. So we get to kind of drop in, and the funnest part of our job is kind of seeing the light bulb go off, and we're like, have you thought of this? One of our customers is it's essentially what I'll call a financial literacy website, and we have a small relationship with them, but we essentially went to them and we said, Right now, you're selling a bunch of leads. What do you think of this? Why don't you partner with us? You send the leads to us, we'll convert them. And even at a 30% conversion, the revenue you're going to make is more than you're able to make on getting a lead gen fee for 100% of your leads. How cool is that? So they're like, we hadn't thought about that before. So we now call them one of our customers. So that's part of the future. The second one is what I said before about the democratization of insurance. It's helping non-insurance entities make insurance a part of their offering. So this is, I think, an important part of the future of insurance, and again, what I call the democratization of insurance. Everyone wants to own the customer. Everyone wants to increase lifetime value. Everyone wants to be part of the digital evolution. Everyone kind of wants to capture that intersection of commerce and risk. So we help, like I said earlier, realtors become home buying experience destinations. We help credit unions be part of the destination for the car buying experience. We kind of help people do that. So that is part of the future of insurance. Insurance is going to continue to democratize. And quite frankly, it almost seems like every week we're finding a new kind of company that we didn't know could be a customer that is now a prospect. Right? We started working a couple months ago with home security companies, and maybe we're just a little slower than most. But we hadn't really thought about home security companies. But how cool is that when you've got a home security company who is looking protection, monitoring?
It's a perfect match to hope for homeowners.
Right? So now we have a handful of companies we're talking to in that space that we're engaged with. So are we the first ones to do those types of things? Maybe not. But we have the ability to move fast, and we have the ability, the scale that you referenced earlier, we've got the scale to actually almost say yes to everybody for almost every situation, and that's pretty cool.
that is pretty cool. So Jim, when it comes to an interesting insurance career, like you've got a serious insurance career prior to going insurtech, right? So looking at your LinkedIn. 20. Let's see. I don't know if I can count that. I'm gonna have to use a calculator.
It's 20 years at AIG, where
20 years at AIG.
Years at AIG, which I was very fortunate to do a lot of different things. I can get into as much detail on that as you want. Prior to that, I actually spent almost 8 years with what, by the time I left, had become Travelers. Actually, if you're old enough to remember,
St. Paul
listeners, no, I started with Aetna Casualty and Surety.
When Aetna did PNC, yeah, long before my time.
Very few of your listeners are going to remember who they were, but anyway, Travelers acquired them in the early '90s, and when I eventually left Travelers to go to AIG, I was an employee of the Travelers. So I say Travelers, AIG. Then I spent a little over a year with a great auto insurance carrier in Miami. And in the midst, I did a couple other things. So my career at AIG was, I call it, it was a little bit of everything, and I kind of describe it in pairs. So I did commercial and I did personal. I did large risks, I did small risks. I did US-based risks, I did international businesses. We talked about before, my last job at AIG was I was president and CEO of Latin America and the Caribbean, based in Miami. I was a home office guy, I was a field guy. So I was a underwriting technical guy, I was a distribution sales marketing guy. So I was really blessed to have done a lot of different things. AIG gave me a lot of different opportunities, and I made a lot of friends along the way as well.
That is a great case for how varied and diverse insurance careers can be, right? Yes. You really got to do a lot of different things, and one of the advantages of AIG is its scope, right? It does so many things, and at a global level, it doesn't have the reputation to be a great place to work at. But it's definitely a great experience, and it definitely looks fantastic on your resume, and can definitely open doors for you going forward. So the change from running AIG Latin America to one of the Florida carriers, although a auto carrier in Florida, right? When I say one of the Florida carriers, almost always I mean one of the property catastrophe carriers that do only the Gulf. But so how was that it seems like a radical change to going from AIG
Well,
to
not
Florida.
as radical as not as radical as you think of. Because one of the many jobs I had at AIG, and my experience at AIG, by the way, was wonderful. Like I said, met a lot of friends along the way, had a lot of opportunities. I mean, one of the things you got to, not to belabor it, but there's there's a few things you got to do to afford the opportunity to have a great career and meet a lot of fantastic people. The first one is you got to be willing to take risk, right? So sometimes that risk is taking a job that you don't really understand. It might mean relocating to a city or a town that you don't want to live in for a period of time. It might mean, gosh forbid, taking a job that's maybe a half a step below where you are now so that you can learn a new skill. Careers are not linear. Careers kind of go like this, and the quicker you figure that out, the better off you're going to be. So, but one of the jobs I had at AIG actually it's the way I got here to Atlanta from New York, was I was appointed the president of their non-standard insurance company. They're a non-standard auto company here based in Alpharetta, Georgia. So I had experience, and that's kind of what got me to the South Florida company.
So hold on, the AIG ENS carrier, what's their name?
Not Lexington. This wasn't
Lexington. The one I was, okay, so I didn't know that they had an auto ENS carrier.
Yeah, it was actually called AIG Agency Auto. It was a non-standard auto carrier that worked through agents. It was a good example. I knew nothing about non-standard auto, but it was just the right opportunity at the right time. And it was actually the first time in my AIG career I sold myself out of a job. I got to Atlanta here in early 2008, and unless you're too young to remember, 2008 and AIG had an interesting relationship. And one of the assets that the organization had decided to sell was its U.S.-based personal lines automobile business, of which I was in charge of a portion of. So sold myself out of a job, wound up landing in a different job within AIG. The second time, by the way, was when I was running Latin America. We decided to sell a bulk of the Latin American countries. So that time I really did sell myself out of a job. That's when I left AIG. So.
Gotcha. And I see that you have your CPCU. When did you get it?
Well, I was really fortunate. Aetna, the aforementioned Aetna Casualty and Surety, they had a really strong culture of continuing education, CPCU, CIC. So I started in the industry in 1989 at the age of 22, I guess, and I had my CPCU by the time I was 26. I don't know how you handle that on the podcast.
No worries. This is conference calls and podcast recordings and everything else in 2020/2021. I've had babies walk in, dogs bark. No worries at all.
I thought for sure. I apologize for that.
No problem. Where was the trip? The year that you did CPCU?
Oh, okay. So let me finish. So I got in the industry in 1989. I finished my CPCU in 1993.
That wasn't Hawaii. Hawaii was 95, if I'm not mistaken.
You have got a great memory. It was Baltimore. Baltimore is a wonderful city, but wow. But here's a great example. I was young, I was impatient, I was a little ambitious, and I was like, you know what? The heck with it. I'd rather go to Hawaii, but more importantly,
you're frozen.
And
so I'm waiting for you to come back. I heard your voice, so I think that you're almost back, but still waiting for your.
I don't know if you can still hear me. Hey, can you hear me?
Okay. You are back now, yes. Last thing I heard, so I want to have to remember to cut that piece out. So I'll cut the dog out since I have to edit this piece out anyway. Okay, so you were young, ambitious. That's the last thing I heard.
Yeah, so I was young, I was ambitious, I was also very impatient, and I decided I could have waited for Hawaii, which is what several of my friends did, but I was like, you know what, I just want to get this over with, get it done. We actually received small bonuses when we passed the test and passed the designation, and I also needed the money. So I actually went ahead and finished it up and went to Baltimore, which is a great city. You know, no shade on Baltimore. We had my wife and myself had a great time when we were there.
We've done Baltimore for Leadership Summit in the, just a couple of years ago. In fact, we did it twice for Leadership Summit, but yeah, it's not a destination city.
It's not Hawaii. I'll give you
There's no
that.
Hawaii anymore. So for the listeners, don't wait for Hawaii. They won't do Hawaii anymore. But there's still a lot of other fun cities in the mix.
Right.
Awesome. Other than do your CPCU and take risks, any other advice for younger listeners, just starting or just in the early part of their insurance careers?
Yeah, I would say blowing out the CPCU thing a little bit. It's just about continuing education, right? Be curious, learn more. You know, one of the things that I wound up getting, I don't know, CPC was one of my designations. I think by the time I was done, I got about 5 of them, just various ones. Full disclosure, part of it was I needed the money, and I was fortunate to be with a company that gave you small bonuses when you passed the exam. So I would be lying if I didn't say that was some of it. You know, take risks, be willing to do whatever you need to do. Don't be afraid to take a half a step back, to take 2 steps forward. That's the key advice that and be nice to people, right? It's the relationships are what last in the industry. The knowledge comes and goes. I actually can't remember. I probably would not be able to pass my CPCU exams now, 30 years later, but the relationships that I made throughout my career is important, because those relationships are not only important from a personal perspective, but they're also important from a professional perspective. As this is somewhat cliche now, but many of the jobs I was given the opportunity in were from people that I had developed a relationship with previously, and they saw something in me and they decided to give me the opportunity. So you can't underestimate that.
I agree with that completely. I've been around for 11 years around the industry, and it truly, the relationships are the what opens doors for you. And the funny thing is you have no idea which relate. So when you said be nice to people, not only do I agree, but I think it's important to add, be nice to everybody, because you have no idea who's going to be in the right position
Exactly.
later. You truly just don't know who's going to explode and grow quickly and be in a position to help. My biggest customer at Jacobson today happens basically I one of the many friends that I made through CPCU at a CPCU leadership summit called me to invite me to speak at a reinsurance conference in Miami, at a reactions conference in Miami. And at that point, I had done a significant amount of speaking, and I at that point was at the very least asking for paid travel before saying yes to an event. And in this case, there was nothing. It was like, we'd love to have you, no budget to even pay for travel or anything. And the only reason I said yes is because it was somebody else. I lived in Atlanta.
Exactly.
Right? Quick flight to Miami is not bad. I'm like, yeah, a couple $100. Spend the weekend in Miami. I've always wanted to see the reinsurance side a little bit closer because I've never worked in reinsurance. So I said yes. Well, I have one of the people that watched the panel turned out to be a VP at this company that that later reached out and had me speak at a different event, and now we've done a bunch of business with them. Like, it literally, like, the only reason I met them was because I said yes to a speaking event because the person that asked was a friend from CPCU, basically. No idea. Unpredictable.
Absolutely. There's actually one more thing I'll say, and this is something that I think especially your younger listeners probably, if they have heard it, they don't hear it very often, and it's what I call control, right? And what I mean by control is I've seen more people disrupt their career because they failed to control themselves. And I'm not just talking about temper tantrum. And I'm not talking not being yourself. I'm not talking about being someone other than yourself and not being genuine. But there's a degree of self-awareness that is necessary to understand how you're being perceived by others in the room. And there's a degree of control that you must assert over yourself so that you can constructively engage with them. Where I've seen more people fall off the rails is those that lack that self-awareness, or they lack the ability to control their impulses or their words or their actions, versus the person who sits back and they may be considered a quieter person in the room, but they're the ones that are actually reading the room, understanding the people, and wind up having much more constructive relationships and business engagement. So I think that's really, really important. And it's one part self-awareness, one part self-control, as long as you make sure you hold on to your identity, because that's really important.
Okay, that is wonderful advice. I agreed, and I would add to that: make sure you have a couple of trusted people who understand the industry, who you've developed. I want to say a mentee relationship. Make sure you develop people who not only understand the industry, but who are willing to tell you when you're being stupid. Right?
Absolutely.
For me, Mike Caselmi, former president of the CPRU Society, has pulled me to the side before, and and I appreciate that,
Sure.
because if I don't know, I'm doing it, but I could have taken it the wrong way, and just
Correct.
gotten mad at him, assumed that he was attacking me, when really he was trying to keep me from looking bad.
You're talking about humility. You've got to have the humility to check
Absolutely.
yourself.
So have the humility to accept the feedback, and make sure that you develop those relationships so that people will tell you when you're accidentally mishandling things and making
you're correct.
damaging
And by the way,
your reputation.
I love this subject. I've actually had the pleasure of sitting on 2 university advisory boards, one for Georgia State here in the insurance school here in Atlanta, and then my alma mater, Clemson. And that's actually exactly part of the advice that I give when I have the opportunity to speak to students, is because they're all hungry for, we know what we learned in the classroom. Teach me what I can't learn in the classroom. The soft skills, the life skills, the interpersonal skills, those types of things. And that's exactly part of what I talk to them about.
Excellent. Jim, thank you very much for your time today.
Thank you.
It's been wonderful. That's all I got for now. But look forward to staying in touch. Thank you for coming on the show.
Thank you very much, Tony. I appreciate it.